Welcome to TheNBA.com. This is John's report is for the 25th. Well, we got a big reversal off that support line. We had pretty weak readings from MBI Magenta in that, but it just wasn't enough strength from MBI White, and we were coming off that full reset of steel from below. Now, if steel had been above, I would have expected that we would have dropped to the 50%, but that just wasn't the case. It was a complete reset from there, and that made it easy. And then, of course, you got the drop of orange, and once it dipped below the red, you've got a nice power jump from that. Still can retrace 50% or at least a third into the move. Just a question of how much equilibrium people want to achieve, and this is part of the selling was for what. There's no real news on it. This is a back and forth with Powell and comments from Trump. But overall, what you're seeing is the U.S. is going to have a huge amount of investment, and that hasn't changed. The world's seen no peace, but also no escalation yet, though we are seeing some signs that may change. And then you still have the situation. The European Union is a disaster zone. Tariffs are continuing, and they don't have any inflation to justify the fear. But in that fear, you get some confusion. People take advantage of it, and boom, then they just revert right back, and we're exactly where we were before. So not a whole lot changed. You can see the difference was Nasdaq was a little bit weaker, but once the crossover took place, it was a bit stronger on that recovery. From a Treasury standpoint, I get nothing. It's just the Fed is not involved. Powell is sitting all of this out, and while you can argue that rates should go lower, this, that, and the other, it's like fine, but from an historical standpoint, no. And from a Fed balance sheet, it certainly is helpful having them up there, especially as they acquire more treasuries, so that if they do lower rates, they make a substantial profit. From an oil standpoint, mediocre. It's not horrible, but it's not doing anything special. So it's low inflationary, and the Fed can clearly see that. And then the question becomes, you see the softer housing market and then people staying away because of rates and that. And, is that a softening impact? Yeah, we'll see. It should have that kind of delayed reaction. And then it becomes a question of, sort of balancing a soft mediocre kind of growth situation. They're really not interested in what Trump wants to do, like he did in 2016, where you see the, big spurt in growth in that. It's just not something they want to see. And then, they have their reasons. They think that, well, if you have that, you're going to definitely have to have some type of recession to moderate it, as opposed to seeing it, constantly rise. And well, I got caught up there because I was going to say there's really not a whole lot of evidence to suggest that that's actually true, but it becomes a question of capacity, and can the world sustain? This gets back to what happened during the .com era and stuff, and even now what's happening with AI. They created a capacity that was greater than the use at the time, and that didn't even out. Everyone thought, well, you're laying all this cable and everything, and are you ever going to be able to use it? Clearly didn't take that long before it was definitely usable. It was just ahead of their time. From a euro standpoint, insane that this idea that the dollar is going to be suffering because of the tariff situation is just foolishness. But fine, jump into a euro where they just announced yesterday that Germany's still in a recession, can't get out of it, and no hope whatsoever of doing so. Yeah, go figure on that one. Gold pumping on that. They all have their theories of as to exactly why this and that are doing a thing, but it's just speculation. And Bitcoin, of course, jumping on the excitement of everything, but look at how quickly it trailed off. Give up all those gains and more. So new lows there. What have we got? That almost fills us all the way back to even before the positive extreme. So that was the first marker right before the positive extreme. It was a yellow. So in selling mode, where we've been in here continually. Those are the two that you would look for. The next one being all the way down to the 109 range, so just over 108.5, something like that. From an ETH standpoint, super excitement, and fading back just a bit. They're still going to remain elevated, but this is just a normal place. So what we saw, we talked about this. We had this spike coming back up. Oh, then we had an MBI white spike again. So we knew we were going to reface the 0% line. Came right back to it. Then magenta pops over. Well, white came over it, but magenta was still riding over. Well, that's a short rally right there. That's your gold. That screams, buy now because it's going to shoot up. And sure enough, skyrocketing through that. And, you had cyan under red by the time that rally started, but that's a little later. Your earlier signaling was right there with the MBI white move, even within a week shakeout and all of that, and then the turnaround. So it was sort of like that early warning system that just sort of like lets you know that, hey, there's a potential that the shorts aren't going to have enough strength to overcome the overall move. And the buy took place right there, 63.95, and where'd it go? 64.76. So yeah, just under 100 there, but pretty clean. And that's what it looked like yesterday. It was pretty much over before it even began. No one had a chance to do much of anything, and then from there it was just straight across. So you would expect a little bit of backfilling going in through that from the OPEX now, because everyone's got to get into their new positions. And in the European session, you can see here right now, lackluster, because there's not a whole lot of excitement going on here. And you're getting close to the end of that summer range, and once we move back into September and that, and everyone's going to be back in and heavy, then we're going to start to see some fireworks, because then companies are going to have to show what they've done, and you're going to start seeing winners and losers and who was positioned correctly and not. And I think that'll be a much more interesting period. But still, that was reasonable volatility for the last few days, given pretty much not a whole lot happening. As always, anything relevant, I'll put it on our team chat. Have a good one. Trade well.